Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive buyers defended a important high volume node at 1967.5, and so far the market has held up pretty well in the overnight session, and we've seen some continuous buying off that level. So heading into the open, as long as we can hold above 67.5 to 69.5, the market can simply balance and then eventually break out and target 77.5 to 79, and potentially the open gap at 80.75 and then 81.75 to 83.75. The high odds objective on the upside is 77.5 to 79, but if there's some decent buying behind it, if volume's looking good, momentum's looking good, then the market could also head up and test the 81.75 to 83.75 zone, or at least fill the gap at 80.75. So right now our bias is going to be more to the upside as long as we hold above 67.5 to 69.5. In the event of a strong break below the initial support zone, which we're also going to be using as the bull bear zone today, then we could get a directional move to the downside and go lower and fill this naked VPOC at 63.75, test the support at 62.5, and then most likely come down to 58 to 60 before we get any decent buy response. Now, because this market has been quite resilient, in the S&P we could get buyers active even at 62.5, but the ideal spot then on the downside would be 58 to 60 for buyers to step in. And in the event of some extreme liquidation and some heavy selling, then we could go down to 51 to 53.5, but that scenario seems unlikely right now. Right now, the default scenario and the one that we're focused on is going to be for buyers to step in this morning and then look for a move back up to 77.5, 79, open gap 80.75, and then perhaps in the afternoon or after the market has had a chance to digest some of this movement, we can go up to 81.75 to 83.75, and this is a zone that has potential to cap the upside on the day time frame. And that's why as the market moves higher, if you're long from 71.5 or 67.5 to 69.5, then you do want to be taking profit at 77.5 to 79 because it is a spot where we could get some rotation. The market doesn't necessarily have to fail at that zone, but there could be some profit taking at that zone. So it makes sense to at the very minimum scale out and take some profit, and then perhaps hold on to a little bit and look for a pop up to 80.75. So that's going to be the main scenario that we're focused on, and unless we see some heavy downside internals or just price action telling us that this market is still quite weak, we'll focus more on the long side. But if we get some sort of directional break or basically a wide range bar breaking through 67.5, then we'll know that everyone who bought in the overnight session could be in a losing position, and we would be breaking below an important inflection point, that 67.5 HVN, and then that could have some follow through down to at least 62.5, and then probably 58 to 60, where buyers can step in yet again. So that's the main idea heading into the open. Let's see how well the buy side holds up this morning and take it from there.